Hey guys, it's Jeff Trapp here with the Tax Planning Pros, and I'm so glad you've decided to join me today. Well, 2023 is almost gone, and there's only a few more days left to get those year-end tax deductions and year-end write-offs. And today I want to talk about something that is phasing out this year, something that next year the deduction is going to be much, much lower than it currently is. So if you're looking for some last minute write-offs, you're going to want to listen to today's episode. So what I'm talking about today is depreciation write-offs. So when you buy furniture, fixtures, equipment, tools, vehicles for your business, you get to depreciate that over time. And typically you can depreciate that over, 5, 7, 15 years. If you have real estate, residential properties depreciated over 27 and a half years. If you have a building, a commercial building or an investment property that is commercial, that's depreciated over 39 years. Well, there's some things that you can do to actually depreciate the cost of those items much, much quicker. And you can do that through Section 179 expense and bonus depreciation. And bonus depreciation is 80% this year. So what does that mean, right? So if you buy an asset totaling $10,000, you get to write off $8,000 this year. That's a huge, huge write-off, right? And that could definitely bring your taxable income down, therefore bringing your tax liability down. Now, next year, that's going to phase out and drop to 60%, and then the following year, 40%, and then the year after that, 20% till it's gone. So I'm not saying go out to spend money just to spend money, but if you're looking for additional write-offs, this might be a great thing for you and for your business. So next year, if you take that same $10,000 pieces of equipment, you're only going to get to write off $6,000. Well, that doesn't sound very big at 10,000, but if you're looking at equipment that's 100,000 or machinery or vehicles at $100,000, 80,000 and 60,000 are a big, big, big difference when it comes to the tax write-off and the tax savings. So these are some things that you want to keep in mind. Now, maybe you have a vehicle that is falling apart, or you have a fleet of vehicles, right? So if you have a vehicle that's over 6,000 pounds that you purchase, that's gross vehicle weight. And if you're trying to think, well, how am I going to know, Jeff, if this gross vehicle weight of this vehicle is over 6,000 pounds? You just want to hop on Google and just say, type in, I don't know what your favorite car is or what car that you're looking at, but if you're looking at a fleet of trucks or something, Ford F-150 gross vehicle weight should pop right up. If not, there will be a number of articles on the technical specifications of the vehicle that you can take a look at to see if that vehicle qualifies for the 80% write-off. So I'm not saying go out and buy a vehicle just to buy a vehicle, but hey, if that's something that you're looking to replace in the next year or two, you might as well get the larger tax deduction this year, as long as you have taxable income, right? And so that's important to know. This is the time that you should be sitting down with your tax strategist and your tax team to figure out, okay, how much money do I owe for taxes, this upcoming year, this upcoming April? And, do I want to lessen that load and lessen that burden? And, these are some great fast ways to do that. Now, if we're talking about real property, right? We're talking about those short-term rentals, single-family residences that you're renting out, or even commercial or investment properties over 39 years, something that you may want to consider to do, for next year's taxes, for your 2023 tax return, right, is that if you purchased a property, you might want to take advantage of something called a cost segregation study. This is where we can go in to the property and pull out the components, the 5, 7, and 15-year property that qualify for the 80% bonus depreciation, therefore accelerating that depreciation and those write-offs, therefore saving you money on taxes. And if you're thinking to yourself, Jeff, I have no idea what that is. talk to my accountant. He has no idea what a cost segregation study is, or he's not advising me on bonus depreciation. Then what you're going to want to do is book a call with us. We're happy to help you out and walk through these things with you. And also, you can download our free tax playbook where we go into more of this stuff in depth to help you save money on taxes and keep more of your hard-earned money. Because I know for a fact the government doesn't spend your hard-earned money better than you do. So it's time to keep that in your pocket today. So once again, I'm Jeff Trapp with the Jeff Trapp podcast and the Tax Planning Pros. And thank you so much for joining me today. And I look forward to seeing you on the next episode. Y'all have a very Merry Christmas and a happy New Year. Talk to you soon.